Welcome back. Dale Myers with Vision Advanced. Today we're going to discuss venture capitalists versus angel investors. Are either of these the right fit for you and where you're headed? So, having a conversation with a young man that's in the startup phase for his business, in the construction field, wants to work with granite and stone. And funding is an issue right now, and so he had someone mention to him venture capitalists or angel investors, and he wondered, did I think was a good fit for him? And so that was an impetus for our discussion today. First, understand that both of these cases, venture capitalists and angel investors, they want equity. They want a portion of your business, but not really long term. They are looking to cash out in a few years. That's the first thing. Understand, these are not people that just want to ride and get monthly residuals. They want to cash out, typically at least 10 times what they put in normally 5 to 7 years, depending on the term. So that's the first thing. Why am I telling you that up front? Well, I said this video was about, are they the right fit for you? If they give you $100,000 and in 5 to 7 years, they're looking for 10 times what they put in. So that means in 5 to 7 years, you got to have the level of growth to be able to pay them back $1 million. According to the SBA, venture capitalists, they tend to want a higher rate of return. So their expectation is 25 to 35% return. Angel investors a little bit lower, just a little, 20 to 25%, but that's still a lot. And here's the thing, for the right business, that's okay. If you're some high-tech startup, maybe, just maybe. But for most small businesses, that's not realistic and doable. Not that you can't possibly grow that fast, but understand this. They are looking to cash out. What that means is they're looking for you to either buy them out or sell your company so that they can cash out. And this was the point that a lot of us, if this is your baby and you're not a serial entrepreneur, if this is, no, I want this to be mine forever. Most of the angel investors and VCs, venture capitalists, VCs, they're looking to cash out, and you might have to sell the business. And so just know that they're going to take probably a seat on, they're going to insist that you form a board of directors and give them a seat on the board. All right, so I kind of got ahead of myself. I actually had a script. I'm not following the script, so let me look back at what I said I want to talk about. So who do these people tend to be? Angel investors tend to be one individual. There's the SBA has this thing called an accredited investor, which means they have like at least a net worth of $1 million and bring in at least $200,000 annually. They can be friends and family, or they could just be people that that you meet. Venture capitalists tend to be a collection of people, and it could be individuals, it could be individuals and corporations, large corporations or small, but it's a group that's investing as a venture capital firm, and they tend to be limited partners involved. Let's see, the source of the funds. Well, we just talked about that. The angel is giving their own money. The venture capitalists are playing with, often it could be they're playing with pension funds, the funds from major corporations. So that's a little different. The amount of the money significantly varies. Again, this data comes from recent small business SBA administrative data. 11.7 million on average for venture capitalists. That's significant money. 330,000 on average for angel investors. All right, and then so we talked about the return on investment again, because the venture capitalists are putting in a little bit more money. They want more back, 25, 35%, whereas angels about 25%, 20, 25. When do they like to invest? So because the venture capitalists are putting in a lot of money, they tend to want to invest a little later on after you've proved your concept. Sometimes they will invest in the right startup with the right management team, but it's normally a little bit later, again, after you've proved the concept. Angel investors, on the other hand, will often get in bed with the startup. It could be, that it's just they like the management team, they like the idea. It could be something that they're interested in. Very often, these are people who are entrepreneurs themselves. So, if you're an entrepreneur, you still like scratching that itch. All right. Let's see. The role. This one is also kind of critical. Angel investors, because they're former entrepreneurs and you might be doing something that's interesting to them, they'll often become a mentor to you. Whereas most VCs, they're going to insist that they're going to help you with bringing on the right executive level talent to make sure that they get the return that they're trying to get. They tend to be a little more hands off. All right. Now, here's the thing. The whole takeaway is this. Could it be right for you? Well, if you want 100% control of your company, neither of these are a great fit. If you want to be the deciding force of whether or not you sell your company or not, now again, some angel investors will be a little more flexible than venture capitalists, but understand, they're in this thing to make money. They are going to insist that you have an exit strategy. How do you intend to exit so that they get their expected return on investment? They're going to do their due diligence. That's basically mean they're going to research you, all of your claims, everything you put in your business plan. They're going to research it, and they're going to spend some time digging. I think the stat was only about 90%, that they reject 90% of proposals, over time, because they do their due diligence. All right, so again, kind of after having that conversation with the young man, he was like, well, no, it wasn't a good fit for him, but also it probably wasn't a good fit for the VC either. They tend to both angels and VCs tend to like to invest in high-tech firms, science, technology. That's not always true, of course, but just know that they're not really looking for slow growth firms. Now, you may have a cousin with $50,000. He might help you out. That's technically not an angel, but you could, it doesn't fit our definition of angel, and I'm using what the SBA classifies as an angel investor as my barometer. So when you're considering these sources of funds, just know that, it sounds good, but it does have strings attached to it. And, Mark Cuban said that entrepreneurs would be foolish to go get funding in their early stage, because you just need to find a way to slug your way through it, and that'll make you a better entrepreneur and more valuable in the long run, because early in the game, you need them more than they need you, so you have to give up more. So something to consider. We'll discuss that in another video. My question to you today is, have you sought out any venture capital? Tell us a little bit about that experience, and look forward to hearing some of those stories. My name is Dale Myers with Vision Advance. Take care.